First trading day after Nvidia's 10-for-1 stock split that took place on Friday after the market closed. Let's check on the stock, which is Unch. Joining us now for more is Chris Caso. He's a Wolfe Research senior analyst. And there's so many other things that you write about, Chris, fundamentals, but does anything matter more than when you take a $3 trillion company and you do the split, and any gains you have from here, and we really do need to look at that in terms of where that puts the market cap, because, I mean, trees don't grow to the sky. We always say that. I didn't know, it was hard to get to $1 trillion when Apple first did it, then 2, then you got Microsoft and others, but $3 trillion, how much more is Nvidia worth right now, given its future, would you say?
Well, I remember having this discussion when Apple hit $1 trillion with you, and it's still higher. And listen, it really comes down to the fundamentals, to what's their place in AI, where the content's going, and this is still a really good story here. And what I think is important is obviously the impact on AI and such, but Nvidia's content is going up significantly, and this isn't a stock where the multiple has expanded over time. The stock is where it is because the earnings have kept pace. It's only trading at about a mid-30s multiple off of this. So it's been an absolute incredible run, but it has been absolutely backstopped by the fundamentals.
So you're on next year's earnings. What do you mean? It's like 35 to 1?
Yeah, that's right. And as we look, it's been our best idea for the better part of year and a half. Since October 22, we put it on a top picks list. Interestingly, the stock before the split, the stock is higher after the split than it was back in October 22 before the split. So it has been an incredible run. We did recently take it off of our top picks list and replaced it with AMD, just acknowledging the very strong run that it's had. And as you said, trees don't grow to the sky. But we are still very bullish on the fundamentals looking into next year because of the next product cycle.
Typically, it's a 25% move after a split like that. So, I mean, then you're talking about more than $3.5 trillion at that point.
Well, they announced the split on earnings back in May, and it's had a pretty strong run since then. Okay. So I guess I'd argue that it's reflect. If the stock was in, of course, the split doesn't affect the fundamentals, but right. It has had a strong run since earnings, and perhaps the split had something to do with that.
So all in with factor in competition and where we are in the adoption of AI and the use of chips for both of the segments that it causes, to set it up and to build it out and everything else. What kind of compound growth rate do you see for Nvidia over the next 5 years for earnings? Well,
and things are moving very quickly in AI, but it's been running at revenue has been doubling, more than doubling year on year for the past several years as AI has taken hold. What I think is interesting in Nvidia and semiconductors in general is that now we're seeing pricing go up too, and it's not pricing going up just because they're taking price and raising price indiscriminately. It's because at the end of Moore's law, if you want more performance, you have to pay for it. And AI is driving a lot of productivity in the economy. And this next generation of NVIDIA chips is much more productive. And the tagline, what Jensen Huang says is, the more you buy, the more you save. So what's happening is, and the answer to that question over time is difficult to quantify. But the extent to which AI drives productivity in society, NVIDIA is going to take the largest percentage of that because they're the ones enabling it.
Right. But if the multiple stays, I mean, it's not cheap. It's not crazy, but mid-30s, mid to high 30s is not cheap. The stock appreciation will maybe mirror the compound growth rate of earnings per share. Do you think,
right.
You think it can grow at 20% a year for 5 years, earnings per share?
I absolutely do. Absolutely. And
30%? I'm just wondering what.
And I think growth rate in the 30s is a very reasonable approximation on it. And again, one of the proxies that helps you to get to that number is, generation on generation pricing for this next generation looks to be about 40%. And they're coming out with product every single year. In addition, they've expanded their networking portfolio, and going forward in AI, networking is going to be a much bigger driver of performance as well. So there's a lot of irons in the fire. Pricing's going up, and obviously AI is doing what it's doing. So I think a growth rate in the 30s is absolutely reasonable. And again, with a stock multiple in the 30s, that it's a peg of about 1.
There will be competition, obviously. I don't know who you think is a viable competitor, but are there any competitors that are in a good position that don't cost $3 trillion for the company, or aren't it in the mid-30s for multiples? How do you play AI besides Nvidia, or do you, since everybody's still spending money, with the future rewards? We don't know when they're coming, really.
Right. So it's one of the moves we made recently is that we put AMD on our top picks list, and that would be your alternative in AI. The stock hasn't had as much of a run. The multiple's actually similar in the mid-30s right now, but it's a little bit of law of large numbers, law of small numbers. AMD has a lot to potentially gain in this market as a number 2 to Nvidia. And our thesis on AMD is pretty simple. They were able to get kind of a 15% or so market share in the x86 CPU market for many years with Intel, even when they were a generation behind, because the customers don't want one supplier to have 100% market share. We think with that right now, AMD has less than a 5% share of AI. So, there's a lot to potentially gain, and Nvidia doesn't need to lose in order for AMD to win, which is why we put that on our top picks list more recently.
Okay.